exporter of thermal coal used for making energy, and we're the largest exporter of gas. The former head of the Australian Coal Association says we have to take action.
If we don't start climate change, the entire global finance
Exporter of thermal coal used for making energy, and we're the largest exporter of gas. The former head of the Australian Coal Association says we have to take action.
If we don't start to address climate change, the entire global financial system is under threat of collapse. What we do in the next 3 to 5 years is going to determine the future of humanity. And that's I think the seriousness of the situation we're actually in.
Net zero by 2050 means reducing our carbon emissions, the amount of pollution put into and taken out of the atmosphere, to nothing within 3 decades. In the next month, we'll hear that even that target won't be enough to stem irrevocable damage to our climate, and that if we don't cut faster, we risk a hotter planet and more extreme weather events.
We're sort of plodding along, sort of like, you know, we're really just sort of picking ourselves up and getting moving, and we really need to be going at more of the Usain Bolt pace.
A sprint where the prize is everything.
Iron ore prices pulled back from record highs in May as China ramps up its commitment to reduce carbon emissions by cutting steel output following a global slowdown in manufacturing. What impact will the drop have on Australia's bottom line? Here's Rihanna Whitson.
With miners BHP and Fortescue expected to follow Rio Tinto in delivering a record first half profit, the price of the commodity soared to a record high in May to more than $230 a tonne. Since then, it's fallen more than 30% to just over $160 a tonne, and is now in a bear market. So what's behind this massive decline? Well, Brazil's firing back up its iron ore production after coronavirus disruptions and the Samarco dam disaster. The big reason is China.
At the same time, we've seen the Chinese government once again trying to clamp down on pollution levels, and obviously the steel manufacturers are one of the largest pollutants within their market.
Falling demand for our iron ore will hurt Australia's economy and our dollar. China buys 70% of the iron ore we export, and 60% of what they import comes from us.
And the Chinese also looking at now developing projects themselves, such as the Simandou project. So we're seeing all of these factors come together, which is creating a little bit of a negative story for the iron ore market just at the moment.
Treasury assumes iron ore prices could fall to US $55 a tonne by the end of the March quarter. But if that happens sooner, nominal GDP could drop by $38 billion this financial year, and tax revenue by $8 billion.
It's a very volatile commodity, and so the earnings, so long as we track above the forecast, which looks very likely, anything additional is just a risk to the budget.
Not long ago, analysts were tipping a super cycle for the commodity. It's now looking like it could be a super bust.
As the uptake of electric vehicles soars, the demand for batteries is driving a rapid expansion of lithium mining. Already the biggest exporter in the world, Australia is in the driver's seat to capitalise on that demand. Existing miners are expanding and junior players are trying to get in on the action, as Rachel Papazzoni reports.
The scale at Pilbara is really incredible. Very, very large resource, and ultimately going to be a very large project.
Australia is the biggest producer of lithium in the world, and it's in expansion mode.
Scale at...
A year ago, work at this lithium mine in Western Australia had slowed to about 30%. Now it's operating at full capacity, and it's in expansion mode.
The scale at Pilbara is really incredible. Very, very large resource, and ultimately going to be a very large project.
Australia is the biggest producer of lithium. It is a critical component for batteries, which are in high demand for electric vehicles and home storage systems. About 5,500 tonnes of ore is dug out of this pit every 24 hours and processed into spodumene concentrate. Pilbara Minerals hopes to ramp that up as demand for lithium soars. The miner recently bought the mine next door. Within months, it'll start digging out spodumene from there too. Once the ore is dug out of the ground, it's processed in the plant behind me, and 95% of it is exported to China. With both sites operating, Pilbara Minerals will export about 580,000 tonnes of spodumene concentrate from Port Hedland every year. It hopes to double that in the next couple of years. Analysts say the market will need it.
We do sort of struggle to find enough lithium to balance the market, particularly towards the end of the decade.
Increased demand for lithium has seen prices rise before. About 4 years ago, the market was paying more than $21,000 a tonne for lithium. But in 2018, prices started to plummet before bottoming out late last year. Miners aren't worried prices could crash again.
In the first wave, it was very much a China story. It's now become much more of a global story. And in fact, even today, European EV sales are rivaling, China EV sales.
250 kilometres south of Perth at Greenbushes is the largest known hard rock lithium reserve in the world. It's run by Talison Lithium, which is owned by a conglomerate of miners. The newest co-owner is IGO, having just signed a deal with Chinese miner Tianqi to take some of its share. Once a gold miner, IGO is repositioning itself as a battery minerals producer.
We can see a clean energy future, and we can see a future where there's a large penetration of electric vehicles across the planet, even Australia.
Australia has historically been a country that exports raw materials rather than turning them into physical objects like iron ore, which is made into steel in China. Lithium has so far been a bit the same. Lithium has so far been a bit the same, but that's about to change. Later this year, the IGO Tianqi joint venture will become the first operation to export lithium hydroxide, processed right here at Kwinana, south of Perth. This step adds to the value chain, exporting a lithium compound that's been created out of the spodumene.
We need to be thinking now to make sure that in generations to come, we have a broad-based society that comprises downstream, that comprises manufacturing.
This is a spodumene crystal.
Other miners want to keep more of the processing onshore too.
By value adding the spodumene locally, there's a really strong opportunity for us to become a materially lower carbon footprint supply base in the lithium raw material supply chain.
Just like iron ore, Australia dominates the global export market. But there's no argument what will remain Australia's key commodity.
Nothing is iron ore decided to do this of the year in Western Australia.
Hayden Bairstow predicts global lithium demand will peak at just 0.1% of that. Adding another burgeoning industry to Australia's mining export dominance is good news for communities in mining and port regions.
You want the extra work to come.
Brewery owner Dan Scott says increased resources activity has a big impact on places like his town, Karratha.
But what does make us sound busier is from the last boom, it was a construction boom. So from that construction boom becomes a maintenance boom. And now all that extra infrastructure they've got to maintain.
Dan hopes lithium can become a commodity that's also part of the downstream processing chain in Australia and maybe one day a battery manufacturer. If so, we could be looking towards a very bright future. A very bright future.
Over the past decade, Australia has helped the world. Over the past decade, by natural gas, the world has helped the world by natural gas.
Looking to
toward a very bright future. A very bright future. Commodity that...
Over the past decade, Australia has become the world's biggest producer of
toward a very bright future.
Over the past decade, But $300 billion later, and pressure on energy giants to cut carbon emissions mean there are big questions about the future of the industry. Daniel Mercer reports.
Eleanor Short has seen firsthand the remarkable rise of Australia's LNG industry. With her husband Jamie, Eleanor runs an electrical contracting business in Chinchilla, west of Brisbane, servicing nearby coal seam gas wells.
When you go down the main street,
For the past 10 years, companies such as Shell and Origin have been funneling much of the gas through the processing plants at Gladstone. They've got Shell represent on the other side of the country. There's been huge investment in R&D in response to surging worldwide demand for gas.
the industry to the point where we are now
On the back of the splurge, Woodside is aiming to build the $16 billion Scarborough LNG development off WA's north coast. But there are growing doubts about the prospects for Scarborough thanks to an extraordinary turn of events last month. Within hours, Woodside's partners, global oil majors Shell, Chevron and ExxonMobil, were hit with strikes from investors demanding greater action to cut pollution. It came as the International Energy Agency argued no new oil and gas project should be built if the world is to meet the Paris climate commitments. Despite the upheaval, Woodside says the case for Scarborough is strong.
the reservoir has almost zero CO2. The train that we propose to build at the Pluto site will be very low emissions intensity. So the product that we're going to offer to customers in Asia will be low cost and low carbon.
The critics say investors have their doubts.
Share prices halved over the last 10 years.